Hey everybody, what is up? Brian Foster here, and in this video we're going to talk about two stocks I bought recently in this market crash we're in, how I think they're really been beaten down a lot and they still pay out a good dividend, and the reasons I bought them. So stick around and let's get into the video. Hey everybody, what is up? Ryan Foster here. In this channel we talk about personal finance, investing, real estate. So drop a like and subscribe if you haven't already, and join me on your journey to financial freedom. And without further ado, let's get into today's video. So one of the sectors that have been affected the most in this market crash we're in is the travel industry. They are just getting obliterated. The stock prices are just plummeting harder and faster than any other sector in this market. And there's a reason for it, obviously. You'll see flights are super cheap, cruises are super cheap, and that could be a good opportunity to obviously buy stocks because they are being destroyed in stock price right now. For me, I was looking at this and looking at a bigger picture. Obviously right now we're in a pandemic. I'm looking at the overall bigger picture, and 3, 4, 5 years from now, I don't think people are never going to travel again. I think people are going to continue to travel, and they're going to travel. I don't think people are going to stay in their houses forever and never leave or do anything ever again in the public. I think people are going to continue to travel and continue to go places once this passes. So that being said, one of the stocks I really wanted to look into was the travel industry. Like I said, one of the sectors, and in that sector I specifically was looking at cruise lines. The reason I'm looking at cruise lines is because they have been beaten down quite a bit. Some of these cruise lines are down 60, 70, 80% in the past month alone. For me, I think that could be a good buying opportunity. That's why I did end up purchasing two different cruise line stocks. The reason I did it was because of the price and other factors that also go into it. So let me switch over here to my computer and I'll show you guys exactly which ones I bought and the reasons I bought them. So this is Royal Caribbean Cruise Line. This is one of the stocks I decided to go with, and there's a few reasons. You can see kind of the stock chart here. It's been crushed in this sector. They're in the vacation travel industry. I'm going to switch to another chart so you can kind of see. This is the 3-month chart. I'm going to put you at the 1-year chart. So this is the 1-year chart. You can kind of see how it's really getting crushed. And I will put us at the all data here as well. So you can kind of see how the chart did go up over a period of time, and it's just right now just falling off a cliff and really going down in price. You do have quite a bit of volume here as well. So number one reason is it is down over 75% off of its highs. So if you go here, you can see it's down actually a little 78.84% off of its highs right now. Now this company is currently, since it's down so much off of its highs, it is paying a 10% dividend annually out, which means earnings per share, you get about $8.93 per share. And of that, $3.12 is being paid out to its investors in a form of a dividend. Since the share price currently is in the $28 range, that's about 10.31%. Since it's at about $28, 10% is being paid out in a dividend. Since it's down 78%, usually it pays anywhere between 1.5% to 2.5% annual dividend. And the good part about this company as well is they're paying about 35% payout ratio, which means most of their earnings are not being paid out to dividends. They're being kept within that company. I like to find companies with a payout ratio of 50% or less, ideally, because when things are not going as well, they aren't paying out the vast majority of the cash. They're still keeping 50% within the company to grow organically or what have you. So the main thing is right now it is paying a really high dividend compared to the share price. Usually I stay away from double-digit dividends. However, because the stock price is down so much in that 78% off of its highs, it really, to me, kind of made sense to buy this. They can cut the dividend at any time, but hopefully they do continue to pay that dividend. If they do, it's a nice passive income source that I will end up reinvesting to accumulate shares while the price is down this low. They were paying out dividends, but they did cut them in the past when they weren't doing as well. So they could potentially do that again. Who knows? We'll definitely have to wait and see, but I think that this is a good buy, and it's one of the reasons I did purchase this stock. So for me, these stocks both have been beaten down quite a bit, and they're a little bit more risky of investment than I usually would take. However, when they're beaten down 75% plus off their highs in a short amount of time, they could go down further because we could be just in the beginning. However, I just wanted to take an entry position and scale my position in, meaning when I do buy this stock, I'm not taking all of my shares and buying immediately. I'm doing small purchases over a consistent period of time just in case the stock price does decide to go down. I'm not all in on that price. However, I'm building over time whether the stock does go down further or does go up. I do have a starter entry if the stock goes up, and if it continues to decrease, I can still accumulate shares at lower prices. So the second one is Carnival Cruise Line, Carnival Corporation. It's around $13 a share right now. You can see it's being really bombarded lately. This is the 1-year chart. I will take you to another chart. This is the chart on this. You can see this is the all data here. There you go, so you can see it. And it's just really getting crushed right now. Another cool thing about this one is it is paying out a dividend here. This one is right around that 50%, which I don't like to get too much over that 50% mark, which is really close to it. And I'm okay with that. Right now it's projecting a dividend yield about 13% given the current share price, growth of 5 years. And this one's down 77% off of its highs. Okay, so it gives you an idea where it's at. Today alone it's down 11%, and I did purchase some shares of it. And the main reason I did that is because I think both these industries are really getting beaten up quite a bit right now during this market. And I wanted to have both companies on here. So that way I had Carnival and Royal Caribbean on here as well. So that way the two cruise lines that are pretty big and pretty well known in the industry. This one is paying a larger dividend. However, more of its earnings are being paid out towards that dividend. And it's around 50%. Hopefully they don't cut it. And like I said before, I'm going to be reinvesting those dividends to accumulate shares, especially at prices like this. So one of the things I really like in down markets is dividend paying stocks. And a lot of times I enroll them in a DRIP program, which stands for Dividend Reinvestment Program. And I really like to acquire shares at lower prices when they are in a market crash or recession, which is really helpful to acquire, I guess, more shares. So when the company does better, I'm still going to receive more dividends in the future, which really helps me scale in larger in my position as well. As always, I always encourage you to do your own research and analysis before purchasing any stocks or talk to your financial advisor, things of that nature as well. This is just the reasons why I'm buying these stocks at this price at this time. So just a quick recap on why I decided to buy these two companies. Number one, obviously the stock market overall has been crashing, but in this vacation travel sector, that these companies have been affected probably harder than most companies have, which they're down a little over 75% from their highs already. Number two, they are paying out a really good dividend at this time, which they could cut at any time, but it is a passive income source as long as they do contribute to pay out that dividend. So you are having some type of income from these investments in the meantime while I do hold them, willing they continue to pay out that dividend. Also with that, the payout ratio is pretty close to being under 50% for these two stocks, meaning that they still are keeping a good chunk of their cash, so the dividend yield being as high as it is, over 10%, may not be affected because they're not paying out a ton of money in that dividend. Number three, I think in the long term, people will still continue to use cruise lines for vacations. People are still going to travel. So I think that this market for these stocks have just been affected harder than most, making them a really good value. And in the long term, I believe that people will continue to still use these companies for travel and vacations and things of that nature, which will ultimately hopefully bring them more revenue and be able to appreciate that stock price. Those are some reasons why I decided to go with those companies. They are pretty good companies overall. They've been established for quite a long time, not a huge history. They haven't been around for hundreds of years or anything, but they have been around for a good period of time, and they have seen a recession or two before and have been able to overcome those. So I'm hoping they will be able to do the same with this one as well. And those are some major reasons I decided to buy. Like I said, I'm scaling into my position, meaning I'm not buying all of my shares right now. I'm going to continue to buy more shares whether the stock price continues to fall or rise slowly. That about wraps it up for today's video. I love you guys. Thanks for watching. Drop a like if you do find this video helpful. Also subscribe if you haven't already. And until next time, I will see you in the next video.